Hello everyone, we are kicking off our session on income statement, multiple choice question mastery. Today our goal is not just to memorize the formulas, but to understand the logic behind the multi-step income statement. We are going to focus on the common traps on the CPA exam. If you can master the classification rules, you will nail these questions every time. We will be working through 5 questions today, each one building on the last to solidify your understanding from operating versus non-operating items, discontinued operations, and comprehensive income. Let's dive into roadmap for today. Let's take a quick look at the 3 core areas we will tackle today. First, we will work on the multi-step format, which is all about separating a company's core business activities from its peripheral ones. This one you may remember like how we start calculating from gross profit, then we go to operating income. We will do a couple questions like that. Then we will move to discontinued operations. This is a high yield topic. And you may remember the net of tax rule here. This is absolutely critical. Finally, we will wrap up with comprehensive income, making sure that you know what other comprehensive income is, the use of mnemonic to remember its components. We are going to use this concept to solve 5 increasingly difficult questions. Now let's start with question number 1. In today's challenge, we will start from the easiest one and gradually do more complex questions. Let's start with the first one. That's a question about multi-step formats, separating gross profit and operating income. Our first question is a foundational one. It's testing your knowledge of two multi-step income statements. The question is asking us operating income. So when you see the operating income, think of non-operating income and multi-step income statement. It gave us some information about the account balances. We have information about sales revenue, cost of goods sold, which could help us to calculate gross profit, and administrative expenses. We have interest expense here, and we have gain on sale of equipment. So when you see the operating income, think about which one of those items are non-operating. So that means they are going to be below the operating income line. Just take a couple minutes. Once you're ready, we will do the answer on the next one together. Correct answer for this question is $200,000. We had 2 items. They are not operating income in the question. One is the interest expense. The other one is the gain on sale of equipment. Interest expense comes as a common exam trap, but think of it as a not operating expense. Interest is a cost of financing. Therefore, it belongs below the operating income. The same way, gain on sale of equipment, it is a non-operating item, unless the business is in the business of selling the equipment, but in that case, that would be called inventory. And therefore, it goes in the other income and expense section. And how did we find the 200,000 then? In the question, it gave us the sales revenue amount, 500,000. We deducted cost of goods sold, 200,000. And as a result, our gross profit is 300,000. The question told us the selling general administrative expenses, which was 100,000. And as a result, our operating income is 200,000. Now let's do a question about the classification area. It's basically distinguishing between the operating and non-operating items. This is also a common trap on the CPA exam. The core question here is which of these expenses relates to the company's main day-to-day business operation. So in the question, they told us we have a company, Green Co, and they had the following cost. They had shipping freed out to customers, interest on a bank loan, depreciation on their administrative building, and the sales commission. If you did the first question right, you'll probably get this one. The question is asking which one of the following items reported as a non-operating expense. Once you're ready, we will do the answer on the next question, on the next screen. And the correct answer here is the interest expense. The rule is simple here. Interest expense is a cost of financing. The interest expense, cost of financing. It is not day-to-day business operations. A company does not have to have an interest expense. Therefore, it goes to other expenses and losses section on the income statement. Let's check the other ones, why they are part of operating. Advertising is a selling expense. It is a core part of the business. Depreciation is a part of general and administrative expenses. You have a building and you depreciate it. The salary is also a part of general and administrative expenses. Okay, our third question, this has the medium difficulty. It is dealing with the discontinued operations. When you see discontinued operations, think of them as of tax. The easiest way to remember this is we are providing it in the financial statements to the readers, and we know that the discontinued operations will be reported the last time. So we want to give the as clean information as possible. So as a result of that, we are giving the net of tax information here. Whenever you see a question like that in the options, you would always see a couple of similar ones. One calculates net of tax, one does not calculate with net of tax. Pay attention to that. In the question, it is telling that October 1st, year one, we have a company called Blue Sky. They committed to selling a division, and here they are telling us a strategic shift. You may remember from the class, so that kind of gives us the sign that this becomes a discontinued operations. And October they decided, and eventually December 15, 2.5 months later, they sold it. This is how much operating loss they had, $100,000. They have a gain on the disposal, so they basically sold it for $40,000. And they have a tax rate of 30%. Okay, thinking of the net of tax, try to find the answer, and on the next one we will do it together. Okay, and the correct answer for this question is B, $42,000 loss. How did we get that number? Let's do it together. So in the question, it already gave us the operating loss. It said until they decided to sell this branch, it incurred operating loss of $100,000. And after they sold the item, they had a gain on the disposal for $40,000. So when we sum of those two, we got the information that is our pre-tax loss of $60,000. So as a result of this strategic shift, the company incurred $60,000 pre-tax loss. Here, if you look at the options, I believe 60,000 was one of the options too. The exam trap is here is if it's a discontinued operations, we always report them as net of tax. So the reason behind that is the last time we are reporting it, so we have to give as clean information as possible. The tax benefits in the question, they told us they were in 30% tax rate, $18,000. So their net loss is $42,000. In the exam, you do not need to go all of this complicated. There's a shortcut here. So pre-tax amount, which was we already calculated, 60,000 times 1 minus tax rate, which is 1 minus 0.30. So 60,000 times 0.30, that would also give us the, I'm sorry, not 0.70. It's kind of hard to think enough typing. 60 times 0.70, and that would give us the same value, which is $42,000. Right now, we are looking at the components of other comprehensive income, or OCI. Remember, OCI captures gains and losses that bypass the income statement, but they are still part of the comprehensive income. What are the other comprehensive income? The items, they bypass income statement, but they still affect the equity. We had a poofy mnemonic here. If you remember this mnemonic, this question is basically asking you which of the following items are reported in other comprehensive income section. The first one is unrealized gains, but here I want you to pay attention. Trading versus available for sale securities. There's a difference here. Foreign currency transaction adjustments, gain on sale of equipment, and correction of prior period error. The question is asking which one of the following is reported as other comprehensive income. Once you're ready, let's do the answer together. Okay, here on this screen, I think there's an error because I don't think we had pension adjustment was one of the choices, but we know that foreign currency items are the choices. So if your answer is the foreign currency items, you were correct. Now let's go over the mnemonic, what they are. So the P stands for pension adjustments. The U stands for unrealized gains and losses. But the difference is here is available for sale versus trading security. So if it's a trading security, it is a part of the net income. It goes to income statement. But if it's for available for sale and hedges, it goes to other comprehensive income. And the instrument specific credit risk. So, maybe the company's credit score decreased that affected their equity section, it would go here. So the correct answer for this one is foreign currency adjustments. Now let's do number 5. This question is asking us to calculate comprehensive income. So remember the term comprehensive income, what it is, and how do we calculate this one. So the easiest way to remember this one is, remember how do we find this? First we calculate the net income plus other comprehensive income. That gives us comprehensive income. In this question, we have a company, we have their year-end data, we know their net income, we have their available for sale securities unrealized gains, which is a part of the other comprehensive income. We have their information about foreign currency loss, $5,000 here. Pay attention, they give us the pre-tax versus net of tax values. And we have information about dividends paid for $10,000, and the company's tax rate is 30%. Okay, so the question is calculation of comprehensive income for the year. Once you make your choice, let's go to the next slide and start doing this one step by step. Okay, so before we calculate the final number, let's confirm the formula and what is a comprehensive income. Comprehensive income includes all changes in equity during a period except those resulting from investments by owners or distribution to owners. So anything other than the owner puts money to company or takes money from the company, anything else is a part of the comprehensive income. How do we calculate it? First, we get the net income from the income statement. Then we got poofy items. They are net of tax. I want you to pay attention here because remember in the question, one of the item they said net of tax, one of the item they said pre-tax. It was a small writing and you may miss it. Pay attention to that. After we sum those two values, we get comprehensive income. Okay, so the correct answer is $109,000. So how did we calculate this number? First, we started with net income. The question gave us $100,000. Then we added the other comprehensive income items. Remember, it gave us three different information. They gave us the dividends income, unrealized gain, and the foreign currency loss income. We have two exam traps here. So the first one is the dividend section. So dividends is not a part of the other comprehensive income because it reduces to retained earnings. So they are a contra equity account and not part of comprehensive income. The second thing we need to pay attention here is the pre-tax versus the net tax amount. For other comprehensive income, we report them as net of tax. So we know in the question for the foreign currency loss, they told us net of tax amount was $5,000. But for the unrealized gain, they gave us the $20,000. So how did we get the net of tax amount? Remember the formula we used before. So the 20,000 times 1 minus the tax amount, 20,000 times 0.7 makes 14,000. So 14,000 minus 5,000 is 9,000. So 100 plus 9,000 gives us the correct answer, which is 109,000. Okay, so we did 5 income statement related multiple choice questions. They are very similar to the ones on the CPA exam. Now let's go over the key takeaways. What did we do? The first thing is the classification. If you see interest expense, think of it as non-operating because it's a cost of financing. So we never subtract it when calculating operating income. So think of it. If you get a question that is asking you the operating income and interest expense is one of them, we tend to include it there because we are used to seeing it, but it is non-operating. The second one is the net of tax rule. If we are talking about discontinued operations, and they usually say things like strategic shift. So if you see that term, think of it discontinued operations. We always report them net of tax. So don't forget to apply the rate here. The other one is the PUFI mnemonic. This one is for other comprehensive income. What are those items? The pension, unrealized gain or loss available for sale securities, foreign currency, and instrumental risk. Those are related to credit. Those ones go to other comprehensive income, not net income. The full picture of everything is the comprehensive income. How do we find this value? We basically sum net income plus other comprehensive income. Whenever we have a question about the comprehensive income, watch out for the dividends because dividends is a part of the equity. They are not part of the income. Okay, couple tips for the exam for the income statement questions. First, make sure what are they asking? Are they asking operating income, income from continuing operations, or net income? So based on it, the calculation is changing completely. Watch for net of tax rule. So pre-tax loss, discontinued operations, always apply the tax rate. For distractors, they give us some additional information we do not need. So pay attention to them. This completes our multiple choice questions for the income statement. Continue your daily practice. In the next video, we are going to do a simulation about income statement. Thank you.